All right, guys. All right. All right. Good stuff. All right. We'll go to the workshop. Guys, I just got a 5 minute NQ and ES futures. This is a mean reversion script. Any members that are joined are on. Okay. So we'll let some people join and see what we got. I'm going to sip on some Diet Coke while we're waiting. I did have one early mean reversion long, 1610 on NQ and ES at the same time. Probably going to get this script out next week for ITG. Not that you need it, but boy, it's a lot of... it can help you sit on your hands during a free fall and not try and play counter until the counter setups are there. I have no way to see. Maybe I can see the YouTube thing on my chat. I might have to log into YouTube separately. Uh, 5870. Yeah, weekly buy trigger. And welcome to anyone on YouTube that's not in ITG group. Again, y'all are gonna get free alpha. No big deal. I just can't see the questions right now. It must be my setup. Again, let me see if I can get the dailies on here. Daily. Let me get buy trigger. I'll put the dailies on the mean reversion. I usually don't keep them on there. Again, guys, you get so many lines. Yeah, you can see ES here held S1 demand. on that most recent pullback, 1945. Times on the clock, times on the chart are Eastern. I actually just opened YouTube on another computer, so I can see Rocky. Can't type really in there, but I can see it. It's over my shoulder on another screen, another computer, so I can at least check and see what we got. Yeah, don't do that, Brent. Your wife will hate me. She'll hate you for hate. She'll hate me so much she'll hate you. All right, I don't know how many we got. What's that, Brad? Prove you wrong how? All right, we got 4 more seconds and we're going to get started and go real quick. that means 2 hours. No, I'm kidding. I really have nothing planned, so I just put it on. I'm gonna go through the process. I've already computed the numbers. I will share the numbers with Stream that we've computed the PVI, and we're gonna work through the process. Yeah, you're right though. I just I loaded up another computer and turned it on. All right, so real quick, ES watching, 58-55 zone, and NQ's coming down to weekly sell trigger. And again, just because there's a line on these charts does not mean somebody's going to be buying in here. Does not mean somebody's going to buy in here. Jinx, are you and King? Are y'all on stream or no? I'm talking to the trading floor, so. And I'm going to flip over to just workshops and turn off the trading floor so I don't get distracted. That's all Vet needs is squirrel, squirrel. I'll be all over the place. All right, I'm sending them in a workshop. Okay, here we go. Let's get started. Where do we start? Boom. Let's go back to the very first one. Guys, here's PVI for those that are not familiar with it. Again, it's just a range system that I've written and I've used for literally over 20 years as part of running a hedge fund, but also in my personal account, and we're gonna kind of work through how we build that, how we get started, and we're gonna come up with this week's numbers. Again, there's not going to be anything for this week. This model, because of it's a close model, it will calculate the weekly standard supply and demand zones, which are here, as well as the rest of the zones on the opening bell tomorrow. But again, just looking back, the last 20-some weeks, this is the only breach we had in 2024. So we were literally 51 weeks were winners and 1 week was a loser. Usually we have 3 losers a year, but we're going to see. Obviously, you can see that SPX pushed up here at the end of November, and we peaked out at the first week of December. And we kind of sold off since, so we're going to go through. And again, I don't have anything scripted. I just pulled up my charts, and boom, next chart. For me, I don't really need the volume profile on right now, but for me, going through the analysis each week, I did this again last week. You always got to know where JP Morgan's collars are. For those that are new and don't know, Google JP Morgan collar. Again, they run a monthly collar at the end of the month. The position is hedged. It's 80% of their portfolio. The position starts with where they place their long puts, meaning that if the market falls below here, they've got long puts at 57.10. Is that an important number? Yeah. They got a large position, a large percent market share of the open interest at 57.10 belongs to JP Morgan and their collar. They are going to hedge 20% of their book of business if we get below 5700, 57.10, all the way through the end of February. Now, what do they do to pay for that collar? They sell short calls. So they're short calls at 63.55 SPX. They're long 57.10 puts, and they've used that call short, meaning they're going to have reduced performance if the market gets above there because they've sold calls there. Are they going to lose money? No. They're only hedging 20% of their portfolio. And we're talking trillions. So they're only going to hedge 20% of it. So a 20% hedge is capped. So they're only going to get 80 cents on a dollar, everything above JP Morgan, above their short call. However, they're also only going to lose 80 cents on a dollar for everything below their long put. I don't know if that makes sense to you guys, but if not, go look it up. That's the ELI 5. If I can do that. So here's their and again, I haven't even updated December on this inflection point chart. That's, again, I hadn't updated this one. So when I tell you I hadn't prepped the charts, we wouldn't have December because obviously we got January, February, and March now. So I already got March short calls. I don't know why I didn't update March long puts. I'll get that put on. But it's important to kind of know that, oh my God, if we come down, here's the election gap that everybody on FinTwit knows about. No big deal, right? Gaps do get filled. If we come down and fill the gap, we could expect a bounce. If we don't get a bounce, then we could expect us to go down and touch their long put on their collar. Is this an automatic support zone? No, it's not. But this also lines up with our green fibs that go way back yonder to 23, October 23, the bottom. We got one touch. We got two touch. We don't have a third touch yet. So for a channel to work out, you've got one touch, origination, two touch, three touch. We got three touches on the call side. So we know that's going to work, and that's steady. We don't have three touches on the put side. Now, when you start talking about a channel, my recommendation is you build a channel, you take the channel, you clone it, and you walk the channel up, and then you find your three consistent points. You don't need to go all the way back here to where you know it touches somewhere back here. What matters is this high. I don't know why in March of last year that was a high, and I don't know why in July that was a high. But the important part for me, just me, is that these are parallel. And so parallel lines becomes a channel. Can we have a diagonal? Can we have a triangle? Can we have a wedge, a rising wedge, a fall? Yeah, you can have all that stuff. But don't get too far into the weeds. Like, seriously, you can pass math with crayons, right? You do not. Man, I get salty on Sunday nights. I don't know why. But you guys, you do not fucking need a degree in calligraphy. Man, pull out some crayons, draw some areas. They're important. Now, we've got a trend line hitting right at JP Morgan's February long collar. That's important, right? Because this could be our third touch of our bottom channel. Now, and we would have filled this gap. Now, what happens if this fails? Well, then you've got a huge amount of information down here. And again, I need to take that off because that's not there. That's technically not there. I'm not sure where March is. I don't have it in front of me, and I don't have the time to go do it right this second. But then we also got these two lows. Remember, we took this high and we took this high, and then we got this low and we got this low. And then if you're an Elliott Wavist, again, you're seeing a huge move. You know, that's a 1, and then there's a 2, and that's a 3, and here's a 4, and that's a 5. And off a 5-wave structure off Elliott Wave, what do we typically do? We ABC, and there's an A, and there's a B, and here comes a C. Is this the bottom? I don't know. Is this the bottom? I don't know. And so we don't know all that stuff, but we can start to derive And I know everybody says, well, man, I know everybody talks about what is it, Adam Mancini, Smash. Everybody has if-then statements. Again, if you don't have an if-then statement, then you're basically all in. You're either right or wrong in the market. And I agree with both. I mean, you got to have conviction. But at the end of the day, if we bounce off of this, and we go this gap, this will be at A, B. This will be at A, B, and then a C down to the gap. And off Elliott Wave, we should find a base here. Maybe we wick all the way down here. So if you're interested in getting long at the bottom of the gap fill, could we run down to this zone? Absolutely. Again, man, I am infamous for this one, guys. It is much better to be late to a trend than to be early to a reversal. Early to a reversal means that here was the bottom and you got in as we did, but we didn't make a higher high, and now we're making a lower low, and now wherever you got long in here, you got early to a reversal because you knew we were going back to all-time highs, say last Monday when we gapped higher, and last Monday was the high of the week. And if you got long in here and you were early to this reversal, that this was just a pullback and a bounce, a pullback, and this next bounce was going to take us to all-time highs, and you're in here, you got more than a flesh wound. Like, this is you got a sucking gap wound in your chest area. I mean, you're in trouble. Do not be early to a reversal. Be late to a trend. And that's just kind of, you got to go through this process. TE just put in March. 6165s. I'm good on the call side. 55, 65 is March puts. Let's go edit it. Big difference, right? Because now it lines up with our inflection points. And I'm on short call, man. I got a dog that has literally drunk and puked over 2 gallons of water this afternoon. All right, so there we got March collars on. And again, I put January as bold just because it's front month, solid. March is the biggest. It needs to be. And I don't know why it was not, but March is the biggest position because that's the largest fund for JP Morgan. And so that's their biggest position. So now we start looking at what happens if we fail here. You know how many guys on FinTwit are going to buy? If they had that trend line, they might or might not. I don't know. No idea. Again, this is SPX. Typically, if you're drawing trend lines, you're going to do it off ES because it's open 23 hours a day. But in the event that this is important on SPX, and the guys that get long right here, if we fail this zone, we're very likely going to go down to 2 major institutional players down here. A big inflection point, kind of proprietary, and then JP Morgan's March collar. So, TE, thanks for that. That was huge. Just to kind of make sure that we're not. Then I'll go to the next chart. Automatic. That one saves automatically. Then I go to the next chart. Not much different. Only thing I got here is we got the 50, the 100, and the 200-day, red, white, and blue. All right, we failed the 50-day moving average, came right back to it. We got above it, we came back to it. Once we failed it a second time, again, I don't know why folks get horny about buying the dip, but once you failed a key moving average twice, persistence beats resistance on the way up and on the way down. The more times we fail it, we failed it, we came back above it. We failed it, we came back above it. But when we came back above it, we didn't come back as high, right? It's like a swing. You start off here and you don't quite make it up to the top. And you start off down here and you don't quite make it up. That's just gravity, right? Centrifugal force. Man, your swing does not go any higher unless you add energy to that swing, right? That's why you pump the shit out of your legs when you're a little guy. And so now what are we doing? Well, now we're making a lower high, a lower high, a lower high, a low, a slightly lower low, and now a lower low. And now we're into the election gap. So I would always do this. I'm going to do it live while we're sitting here. I'm going to draw it, and I'm going to drop it to the low of Friday. Because now that's the election. That's all that's left of the election gap. Because we filled some here. We filled a little bit more here. And we filled a lot more Friday. And we filled more. And again, if you go to ES, you filled even more tonight at the open. So this is all that's left of the election gap. That's all that's left. Now, up here, so you got the blue line. So you see how far the fall is to the 200-day moving average. 575. So let's do this just for kicks and grins. And again, is this all you need to do? No. Is this going to change your trading outlook because you know where the 50, but look at where the 200-day moving average is. So now we got JP Morgan, the largest put contract on SPX in the entire option chain for March. It's sitting right here. You got the 200-day moving average sitting right here, and we got our top inflection point sitting right here. So in the event that we fail this zone, I got to go ahead and say if, then. Don't be early to a reversal. Now, could you play long here? Yes, you could. With a tight stop, with a wide stop, with a small position, build into longs, or trade it with a debit spread. Excuse me. Trade it with a debit spread so that if we do bounce and then all of a sudden we fail it later in the week, we got a lot of data this week. Excuse me, my voice just went out. I get excited. If we fail it later in the week and all of a sudden everything's bad, I mean, everybody knows how bad the California wildfires are. I mean, whatever happened to all the damn drones? I mean, could something bad happen on the East Coast or down south? Yeah, anything. Who knows? I mean, assassinations, stupid things can happen. Any newsprint could happen, and in the event that we fail here, all these people that have been long from right here, and all these people that have been long since October, that were just jolly, happy Santa Claus rally, all these people are going to get stopped out. I mean, I think it's ludicrous to not go through and figure out, what about these folks that got long in October? They were happy. What happens if their position goes underwater? When do they capitulate? Well, if we fail this major zone and these guys capitulate, we're probably going to this major zone down here. 200-day moving average, JP Morgan's long put. And so it's really interesting to see this. I was talking about this with the guys from Chicago. We were talking through the bond issue on Saturday morning. And I forgot his name. Who's the guy that runs? I forgot his company. He tweeted out at the same time. Literally, we were on a phone conversation, but he tweeted out about January having the top of the market. And so I went in because I already had the numbers right in front of me, but he tweeted out these. Let me wait a second I guess YouTube's voice will catch. But he tweeted these out. He tweeted out 23, 24, 25. January 6th, currently the high of the year. Let me go to I am embarrassed. I forgot his name. I'll look it up in a second because I do not want to do a live stream and not give credit to anyone else but shared this. But when you look at it, January 6th this year, January 6th, Monday, was the high of 2025 so far, current. In 2024, January 5th was the low of the year. In 2023, January 3rd was the low of the year. In 2022, these are the ones, one of these he didn't have. January 4th was the high of the year. In January 21, January 4th was the low of the year. So for the last 4 years, the first week of January has been the high or the low of the market for the whole freaking year. So knowing that, and then you got 20, which it didn't matter because we had COVID. But 20 was not a high or a low with or without COVID. So after the first week in January, we put in highs, and then COVID, we put in lows, and then went back. So January, not applicable. 2019, January 3rd was the low of the whole year. 2028, we were higher and lower by February. So if you look at this and you're like, well, wait a minute. 1, 2, 3, 4, 5. 5 of the last 7 years, that first week of January has set the high or the low of the year for the whole freaking year. Are you going to go all in at election gap knowing that 5 out of the last 7 years, that's it for 2025, guys? Now, do I think that's it for 2025? No, I don't. But I can tell you one thing. If we get down here this week and then we bounce up next week and we don't get above this green line, or in the next, towards the end of January, and we don't get back above this zone where we were this last week, and then we fall back below this line, then that number right there is looking pretty damn good as a 3-month high or a 6-month high, what I call minor and majors. Now, you don't know that's a major high or a minor high until when? Way the fuck down the road. June, May, March. But knowing that and seeing this, I mean, you don't have to be Einstein. I just know 5 of the last 7 years, that could be the high of the year. Now, is it going to be 5 of 8 or is it going to be 6 of 8? I don't know. But I don't want to go all in at this election gap knowing this line's down here. I got 2 decent support zones down here. I don't want to go all in knowing that. Okay? That's all I'm saying. Nobody's fighting about it. It's just there. Now, when I go and look at this, and when I look at the election gap, and I see what we got left in the election gap, I see the white line, which is the 100-day simple moving average, SMA. It's open, closed, doesn't really matter when you're dealing with, 50, 100, 200-day moving averages. 21-day moving averages in the yellow dots right here coming down. I use the 21 EMA a lot. But more importantly on the daily is what do we have here? This is the daily chart of SPX. I've got all 3 of my gravity points, and all 3 of them have positive slopes. Now, I drew this line last week in the workshop. And all gravity points went where from last week? Price action moved lower, but which way did gravity points go? Well, I'm going to draw another line this week. And gravity point A is right here. So now price went down, but the gravity points went high. So in the event, when I see gravity points starting to move higher, all 3 of them are together, like that is a massive zone, a massive target to the upside. They're all together. They're all positive slopes, A, B, and C. Let's go here. Take these off. And again, C is the bottom, A, B, C, Alpha, Bravo, Charlie, alphabetical order. They're lined up like freaking 3 good soldiers, not white soldiers, black crows, or whatever other candlestick stuff people want to use vocabulary-wise. But they're just lined up, and they're positive, which means what? We are going to bounce. We don't know where we're going to bounce. So, last thing, and again, I know I'm way off. We'll get to PVI in 2 seconds. I'm just going through how we do it. We did this live last week. I'll do it again. Is anybody on... Sir David, that's a good question. We'll go to that in 2 seconds. Is anybody on YouTube that's not an ITG? Anybody know how far markets typically fall off all-time highs before you start seeing random automatic bids, buying, purchasing? How far do markets fall before institutions start to allocate a certain percent of their money towards the market? Anybody, you guys can answer in workshops as well on ITG. How far? And this is the fun stuff that you guys are going to get to where you're doing it. If you're not doing it and you're going through Twitter, FinTwit, whatever, and you're going through to find what everybody else thinks, that's great, right? That's like reading a book. And a lot of people read a book on leadership and self-help and all this other stuff. But rather than to listen to other people's opinion, why don't you form your own? All right, so we got 10%. What else? There's another one that's an automatic buy, the very first one. I would tell you 10%'s the second one. So let's do this. I can't believe, Greg's got it, 5%. So now let's do this. Let's go to all-time highs, and let's drag this puppy down 5% on. And I'm gonna bring it over so it's not in the way. Let's bring it to 5%. Okay, so I'm gonna go right here to 499, and then I'm gonna go to coordinates, and we're just gonna drop price till we see our first 5% right here. Like seriously, you can teach a third grader to do this. I can't because I'm not a good teacher, but you guys can. Oh, 5%. My first 5% is at 59, 57, 95, 27. Well, sewn biscuit. That's right in our gap. So now we know there is institutions that 100% of the time when we get 5%, there's institutions that are automatically, mutual funds, automatically, portfolio managers, automatically going to start to allocate 5% of their cash back into equities. Automatically. Is this line important? Well, this line matches up with a 100-day moving average. This line also lines up with the election gap. So where are we expecting to go tomorrow morning? We might see some buying here. So then we're going to look at 57.94, 57.95. The bottom of the election gap is 57.83. Underneath there, look left. Where did we stop in November? Anybody know why we stopped here on the 4th of November? Nope. Not a clue. Don't know why we stopped there, but we know one thing. We did stop there, and that's what matters. So we know that we stopped there. In the event that we violate that, now we're at 56.96, just underneath 5,700. How painful would it be for guys that got long last Monday or Tuesday or Wednesday? They saw this wick down, bull market. Actually, it was Thursday or Wednesday. Yep, markets were closed Thursday. And they got on hopium. Buy the dip. We're going back to all-time highs. We got another leg higher. I think we do too. But again, where am I interested in? I'm interested in longs once we get above what? Monday's high. Last week's high. Once we get above 60.18, I am 100% playing for these gravity points. Now, I'm going to take off the white line because that's no longer a gravity point. Now our gravity point went from 60.52 to the bottom of it's at 60.60. And so this is just the process. And again, this, knowing how institutions trade, there's going to be some buying starting right here. Now, are they going to automatically buy, lump sum right here? No, they're going to trickle this money. They're going to trickle this money in. And it's going to be somewhere between this line, the 100-day moving average, this line, and probably this bottom wick. So this is what we would call an accumulation zone. Crazy part about it is this was also a supply zone in November, or a demand zone. Why was it a demand zone? Because we broke a previous high. So we had a break of structure, a bullish break of structure. This is a demand zone. Have we retested it? Not yet. Typically, on a demand zone, I would go to the last 4 hours. I'd go to a 4-hour chart. I would go all the way back here, and I would draw my demand zone as my last red. And I would use that wick to that low, and this becomes my demand zone. And I did it earlier on ES. I actually did it Friday night on ES because I was talking to some guys about it. But this becomes a higher time frame demand zone. Why is it a higher time frame? Hell, we're in January, and this is all the way back to the 1st of November. So this demand zone has not been retested for 2 months. Now, everybody's saying the sky is falling. But the truth is, until we break a demand zone, we don't look left. We don't look past the demand zone. This is as far back as we look. Let me see what's next. Oh, no change here. Same thing. Inflection points. The blue line is just the midpoint of that channel. Again, if you go back and use Fibonacci, here's the halfback from, again, the lows, Monday lows on the 4th of November to all-time highs. We hit the halfback and we hit the 618 and we're underneath it. So if you want to play it safe and you're a Fibonacci person and you believe in that, wait until we get back above the halfback. Wait until we get back above basically 5,900 on SPX to get long. And if you get long there, then we'd be looking for what? Value area high from last Monday. I would. Again, a move from 5,900 up to the 50-day moving average, 59.52. There's 50 points there, guys. So one way to play it on a dip tomorrow or Tuesday would be that if we get down and we hit into this gap, into this 50%, 5% off the all-time highs, maybe you buy a call debit spread out through February or March. And don't buy a wide one. Don't buy it super wide. Your how much money you want to put onto the table and bet on that hand of poker, bet on that position. That's how wide, how much you need to pay for your width. 50 wide, 25 wide, 10 wide. How much you want to pay? Everybody looks at how much money I can make if I'm right. That ain't the way to trade. If you want to trade, you don't worry about how much you're going to make if you're right. You worry about how much are you willing to lose. Because if you want to worry about how much money you're going to make up here and you go 100 wide and then the market drops back and we get down into this demand zone, I got news for you. If you trade February and we drop down here and you're 100 wide, your position is going to show a mega drawdown. Then you're going to be like, hey, vet, where do I cut my long? How about you don't cut your long? How about instead of buying 10 longs at 100 wide, maybe you only buy 5 at 100 wide. You've got the same amount of risk. You just don't have a stop on your 5. Again, we call it price for zero. Right? You size for zero. Price for zero. You only put what you're willing to lose on the table. Now, if that means you only do 5 wide or 15 wide or 25 wide or whatever the number is, go through and look. You already know where the zones are. Go through and look, and do you want to trade a 50 delta and long a 50 delta and short a 30? You want to trade long a 30 and short a 10? Do you want to do a 10 delta wide? Do you want to do a 20 strike wide? There's a whole bunch in that, and I ain't got time to get into all that tonight. Everybody kind of does their own thing. If you got questions, get help. If you aren't sure and you need help, ask. If you want to, sorry, excuse my language, but if you need somebody to change your diapers and you got to suck the teat, I said teat, not tit. If you're that, then you probably need to pay somebody and get help. But it's not too hard, and we got plenty of data sitting right here in front of you guys to figure it out. Here's ES, just real quick, and then I'll get into PVI. All I did was draw the current zones that we're dealing with. I'm all the way down on a 15-minute chart. Again, what happened here? Here was a high on Friday, right? 15-minute. We broke highs on Friday, right? A bullish break of structure. Go back to the last red candle. This is the last red candle. So you're sitting there. Everybody that's worth their salt would tell you somewhere around 58, 55, down to Friday's low at 12 o'clock. 58.45 to 55 was an important zone. We hit it late. No, we didn't. We didn't come back down to it Friday afternoon. We hit it early in Globex session. And now, look, ES is back below this demand zone. Again, supply zone goes up here. We had a break of structure. We had a lower low. I would technically, if I was drawing 15-minute supply zones, this was here from just Friday, but it's going way back over here. I don't need to get into that tonight, but just looking through structure, we had another structure last Wednesday, and then looking at last Monday, I didn't even draw it. Here was Monday, and what do you know? Here was our highs last Monday on ES. Lower high, a low, a lower high, a lower low, bearish break in structure. Don't worry about the 50-day moving average right there because that's on a 15-minute time frame. But a lower high, a lower low, a lower high, a lower low. And now I'm interested, do we get a higher high from last Wednesday? We haven't yet. So where do you start buying? When we start making higher highs. I mean, it's that simple, right? We pushed up Friday at 145. And again, look at that 1400 or 1205 counter. I mean, that was trade of the day. What do we have? 930, Omar high a day. Market never broke the opening high on NQ or ES. I'm on ES here. Market never broke the opening high. 930 was the high of day. You never had a position where you had to get into longs. There's not been on Friday. There was no movement back to the NFP candle. So again, once we break 59.21 on ES, then we're going to go clean up this structure. Again, guys, when you look at a 15-minute, 30-minute, 1 hour, 2 hour, 4 hour daily candle, and you see these big red candles, that's like painting a dark wall one time. Like that roller of paint went straight down. And then right here, they went back up. So this part of the wall has been painted. This part of the wall, it's a dark wall and it's got white paint on it. Well, one coat ain't enough. That's it. Are we down? All right, so I got guys in chat telling me we're down. So let's do the same thing on ES that we did on NQ. Price. Let's go all-time high. All right, so and again, this is what I screw around with this all the time. I'm going to sit here and I'm going to climb this ES until I get 4.99. So the highest print where we're still 5% down is, I got to mark it. I hate that it doesn't mark it over here. Not going to lie to you. Or does it? No, it doesn't mark it. Maybe if I drag it. Maybe if I drag it, it'll mark it. Okay, there's 5% down. Let me get rid of my ES one. Yeah, it still doesn't. Little bastard. All good, though. So we're right here at 5% from all-time highs on ES. Is it a time to buy? I don't. First thing I would do if somebody's sitting there in chat, and I'm just doing this because I want to look at it, is we're talking ES here. Is ES giving me a mean reversion signal on the 5-minute? Nope. There's no signal. Are we below the bands? Yep. 100%. We're below the bands. And we'll get this script to you guys this week. Again, we had a long and cover. Nothing. We never got above the top end of the band. Which way are the bands projecting? Lower, right? Down to the right, down to the southeast. What did we just hit? Weekly demand. Let me see if I can drag this. I'm going to copy this over to ES and put it in. How long is it going to take? And will it copy? Is that it? Yep, that's it. So now we're at what? 58.45? 58.45 is 5% down. And so now where are we? We're kind of in flush mode. We're now below 5% on SPX. We are on ES, which means SPX is probably. So let's look. SPX closed at 27. ES is down 23 from 27. So we're at basically 58.02, 03 right now. So SPX is not quite at it. SPX is still 7 points above it. So what matters, SPX or ES? I don't know. What matters, 200 EMA or 200 simple? Do weighted matter? Do futures matter? What about, I can't tell you how many folks, I shared this a lot with Andrew at Options Millionaire back in the day. Don't do any technical analysis on SPY, because SPY is the caboose. I mean, SPX or ES is the engine, and it changes. Who's leading, right? And so one of them is going to be engine 1, and one of them is going to be engine number 2. But SPY is always the caboose. So SPY is always you're going to get the after effects at the tail end. And that's why SPY will typically overrun support or underrun support and resistance all the time, because it's reactionary, right? They're just doing everything they can to keep up with the index. And sometimes they overshoot, and sometimes they undershoot. I'm of interest to this. Again, new members, weekly demand. I think NQ's added as well. Man, if you get a weekly demand trade, I can tell you right now, every person in ITG right now under weekly demand, every person in ITG right now is going, and they're looking for a 5-wide call debit spread on ES. And they're going to pay no more than $1.25 for 5-wide. Every damn person. That's worth their salt. And if you don't want to make that trade, that's fine. But with an 83% win rate, $1.25 at weekly supply. Again, that's why I told you guys about ES earlier. We opened pretty damn close to demand. We never got back above daily buy trigger, let alone weekly buy trigger. You'd like to see us right in the middle, which here we're right in the middle. And so I got to hide the daily. But here we're right in the middle, right? Weekly buy trigger, weekly sell trigger. Right here in the middle is where you're going to get your best shot at $1.25 call debit spread and $1.25 put debit spread. Now, you might be a little bit outside of there for $1.25, but let me tell you why the $1.25 works. 125 here, 125 here means I've got 250 invested in a 5-wide. So if we close above or we close below, I'm going to make 5 points. Well, if I put 250 in the machine and they're going to pay out $5, that's 100% return. When we're going to close outside this box, 83% of the time, I'm going to have, Brad, it doesn't matter. I mean, your 125 is still, you're paying for your 5-wide. Your SPX, you don't have it yet. You can't trade SPX options at 8:15. It's 6:15. It's 6:30. We're right in the middle. So if you wait until 8:15, right? If you wait until 8:15, this is the first candle you could trade SPX options on. That's if and only if you got Interactive Brokers. You ain't getting a 5-wide debit spread, put debit spread down here. We're already down. You've already lost. Okay, this one right here, it's already in the money. So what do I tell everybody? If I can get $4, from a put debit spread, I close it. So $1.25 and $1.25. And I know ES is only going to pay out half of what SPX is. Should I trade 75 cents for ES? You get the concept. You're just going to trade. You can't trade tighter than a 5-wide. So if you want to do 70 cents for a 5-wide ES instead of $1.25, because you're only getting paid half of what you get paid for SPX. But the concept is still you want to get a 100% return off of your total debit. So if you put in 50 cents here and you put in 50 cents here and you get $1 here and we close outside it, you're going to make 5 points, which is $2.50 off $1. That's more than 100% return. Okay, so here we are. We're below weekly demand, a real good opportunity. You know we're more than likely coming down to fill this gap, right? And that's what's happening as we speak. Now let's get to the market. Let's get to PVI. So first column is going to be chart, so we can draw. Here is the algo. And now there's 20, somebody's calling me. We now have 26 algorithms that help us build this model, this profile. And so here's the 26. Let's look at the high side first. Here's 4 of the models. Okay, this number on the left, that just means how many models are saying. There's one model that says we're going to get 58.85 to 58.95. So basically a 58.90 model. If they're saying that's as high as SPX is going to go this week. Okay, there's 4 models that are telling us that SPX should go to basically 59.50. There's 4 more models that are telling us that SPX should go to 60.20. So the crazy part is there are a whole bunch of people that are trading that with a credit spread. And they probably got a debit spread down here. And they probably got a credit spread here. There are other people that are going to play a butterfly. And they're going to buy here. And they're going to sell here. And they're going to sell up here. Okay, we know this is disconnected. And so this one is 2 times the EM, expected move. Sorry, I'm drawing with my mouse. So say anything about my art and I'll boot your ass. I don't care. I don't get paid to draw. I get paid to trade. So 2 times expected move, 2 times the expected move. It's by itself. It's isolated. There's a huge gap in between that and the profile. That means we ain't going there. So if you are a 89-year-old with 40 grand in your portfolio and you want to pick up dimes or nickels, sell the 2 times expected move each week. As long as it's not attached. If it's attached, don't touch it. Now, the high side's pretty easy. The high side gives us 3 models that are inside this big old cluster. And so this, if you're a delta trader, this is where you should be buying calls. If you're a theta trader, this is where you should be selling calls. Right? And if you're a tent builder, there's your tent. How you want to take that data and go, that's your baby. You spank it. But that's what you're looking at. Here's your delta. Now, when we look at the downside, what do we got? 1 model, 1 model, 1 model, 1 model, boom. 3 models, 1 model, 1 model. We have a cluster right here. And that cluster saying that we might not bounce at 57.15. Anybody remember what's just underneath there? JP Morgan's long puts at 57.15. 57.10. So, here's JP Morgan. That's their long put. Everywhere underneath here, JP Morgan is going to lose 80 cents on a dollar because they've got a hedge in February for one of the 3 portfolios. Not their big one. Their baby one, actually. It's their smallest portfolio. this becomes your core. So if you're looking at theta and you're saying, hey, if we start running up, we ain't running up, we're at weekly demand. Again, I would encourage people to buy, get long futures. Once we failed weekly demand, I keep going back to this and I hate it, but look, I mean, this is an immediate long, right? NQ, get long. I mean, again, if you traded, you went from 911 to what did we hit? 929. And there's 20, almost 20 points on NQ. Yeah. One contract, $400. There's $400 per contract on an NQ. Like that simple because we're just using a big level. Anyhow, I digress. Go back to SPX. Pull back up. And so now let's look at 56.25. 56.25 is where? In between this zone and the 200-day moving average. Like I don't have a whole lot at 56.25. So I want to look left over here and see what's at 56.25. This bottom. This cluster right here is at 56.25. I mean, does anything stand out from Friday the 13th of September? I don't know. I don't remember. Well, we gapped up. There is a gap here on SPX. Right? Are we going to go fill this gap? Not likely. But let's look at what's below 56 on SPX. I mean, let's just go through. 5,700 is our channel. 5,570 is the 200-day moving average. 5,609 is the halfback from where? August. August to the all-time highs. I'm at 56.25. How much premium's that paying? Can anybody check? Can anybody check? Somebody want to run it? Check in Thinkorswim. It's probably more accurate than Interactive Brokers. But that's what this model's telling us. This model's telling us to be careful all the way down to 56.25. Well, I'm going to tell you right now, Moose, Case, SL, myself, Colo, any other theta, big theta traders, I'm going to tell you right now, if we hit 56.25, there are a whole bunch of people selling. Just what's the price of the puts? Just the puts, not a credit. But this one right here, if it's $2, $3 right now, I'm interested. I ain't even shown PVI yet. I don't even remember what PVI is. But we're getting ready to post it, but we got to keep this in mind because this becomes important. So now let's go to PVI. Where is she? Hold on, I posted it. Let me grab it from chat. Here's PVI for the week. It's all I have done right now. Ooh, I can't make it smaller. 55.96. So now 59.96. Autos at 56.18. PWG's at 56.83. Baseline's at 56.03. 5600. So now these are saying that statistically we could run all the way down and check out 5609. So if I looked at 5609, if I looked at the profile, if I looked at the profile 5609, there's nothing down here. Now, are we going to get through that wall? I don't know, maybe. If we do, we know we got 5609 sitting right here. if I sold 5600s or 5500s, 5600s, that's a huge gap. 200-day moving average, 55.73. PVI is, come on, edge in there, 55.96. So now you start looking and go, okay, well, here's the models. PVI is 7 points under baseline. Not shabby. Almost 20 points under auto. Underneath the halfback. So the market's telling us, the models are telling us that even if we did fall off a turnip truck, we're going to come down, we're going to bounce at 09, and we're probably going to close back above 56.25. No guarantees. I mean, there's still, 2, 4, 6, 7 models that count, but 8 of 26 models is still telling us that we might breach 56.25. So how much are 56.25 puts? And then how much are the 5,600 puts? But what the hell? I can't read that. Thank you, Gordon. So right now, the 56.25 puts are going for $11. All right, so we should have a hell of a PCS trade this week. Now, what you do not want to do on this PCS trade is, I'm going to tell y'all right now, this is where I think guys get in trouble. If you don't have interactive brokers, you need to go through and pull the ES aspect of it, because if we get back above weekly demand tonight, eyes would still be on weekly buy trigger. Okay, so the 5,600 puts are going for $9. Okay, so now how much are the 5,500s? Let's go for 100 wide. 55, 56. Maybe we should just put chat up in here. And the DGens get to see how bad we really are. So right now the 5,600 puts for Friday are paying out over $9, right? So this is going to be a mega week. So here we are, first 2 weeks in. Why do we not see it all? Whoa, we don't want that. We're about 85. So here's our first week. We don't have anything past there. Oh, I hadn't even filled it all in yet. So we've gotten $4 for the first week. I think last week was $3.18 between both of them, total premium. And now we're getting ready to, we got $9 at the put credit spread right now. So if you go 100 wide, 5,500, 5,600, it's paying $5.30. I mean, guys, if you don't back ratio into that, I'm doing it right now while we're talking on the other computer. Hot damn. Like, if you don't grab a back ratio, why? Because if we go down below 5,800, which is likely, right? Certainly likely for us to get down below 5,800, right? That's way in, not even touching the model, not fully closing the gap. But under 5,800, man, if you can get 530 right now as a back ratio, I mean, buy 2 and sell 1. And when the second one goes to 11, this is how you make humongous money. Now, be careful, because we often breach 3 times a year, and January is a breach month. But I mean, one trade, guys, YouTube world, one trade pays for your yearly membership. One contract. And we do this every week. The same stuff over and over and over and over and over and over and over again. Is it everything? No. Should you do 100% of your portfolio? No. You should do 10% of your portfolio, 2% of your portfolio, 5% of your portfolio. Why? Do it small and earn a little bit of money while you learn the process. And you go through and you feel the clench, right? I mean, it's the abdominal workout, abdominal ass builder, buns of steel workout like never before. Seeing multiple contracts go in the money. Do not size up. Now, the best thing to tell you to do is get a back ratio in. I would buy 3 longs instead of 2, but I would buy 3 longs and sell 1. And by doing that, I now have the trade is paid for. If we drop another 100 points, then if we drop 100 points down to these levels, say we go all the way down to 56.83 SPX, I mean, that's another 100 plus points lower. Well, now you could take profit on one contract, and then you don't take $5. You just slide way down the option chain to what can you get $2 for your next contract. You just want $2 credit for your next contract. Get 5 on your first contract, 530 credit on your first contract. Okay, don't worry about the back ratio, just on one contract. And then sell. And so you're going to profit on your long on number 3, and then hold number 2 and wait for us to hit what? What's below weekly demand? Weekly S2. That's way down here at 5,800. What's below weekly S2? And I'm on ES because we don't have them for SPX yet. Weekly S3. So what happens when we get down here to weekly S3? Well, that's when you launch your next contract. You might launch it here if we start closing above it. Now, I wouldn't care about a close above it on a 5-minute, but if a 15 and a 30-minute starts closing, we get down below weekly S2, and then we push back up and we get above weekly sell target 1, I'm going to go ahead and launch number 2. Keep in mind, PVI is going to be way down here. Matter of fact, this is going to be PVI. PVI is going to be under here on ES. Right? Conservative. See where our conservative ES is. Oops. Conservative ES is at 56.12. Oh, that's beta for the day. I got to get those off. $56.12. Good gosh, ain't happening. I mean, we could, but man, I don't. It'd be Donald Trump's wet dream for us to get down to 5,600 this week before he takes office. Anything could happen. But again, your job is to identify where the risk is, your risk parameters. I'm loading up. Did y'all hear that? Oops. And again, there's no guarantee. And if you're not comfortable selling the 5600s, then just use the PVI. And it's at 56.90, 55.95. And again, is there a difference between 96 and 5600? Not one strike. That one strike can save your ass. If there's 25 cents difference, I'll give up a quarter. I'm loading it right now. I'm getting ready to launch some trades. ES is climbing. Shit. I'll post it. I just did mine. I'll do PVIs in a second. Oh, I can't post it. I'll post it in there you go. January 17th, 55.90 put, naked, sold, $8. And time is Mountain Standard Time, so 21:08, so 9:08, 18 seconds. Fired, forget. There, y'all saw a PVI trade. Now, I'll go through and I'll put in the long and the short on the PVI portfolio. I just did that in my own personal account. But just showing you that, hey, man, we're at weekly demand. Well, if we go to weekly S2, that's going to be in drawdown. Yep. If we go to weekly S3, it's going to be in drawdown. Yep. If we go all the way down there, you need some longs, right? Not necessarily with, your PVI trades, but you'd like some long action. What you like to do is you like to get long early in the night so that you got a passive hedge sitting right here at weekly demand. In the event that we get above weekly demand, you are crazy not to buy some calls. And again, if you're doing ES, I would do 10 wide for $1.25 instead of 5 wide for Brad, who was asking earlier. But same concept. But again, I do it. Why? Because the amount of times that we close outside this gap, and this goes back to this. I do this every week. Did we close outside? Did your debit spread win? 1. Did your debit spread win? It didn't if you didn't take profit last week. Underneath, and no profit. Because we closed right on weekly supply. You'd have gotten some money, but not a lot. Okay? Win, a win, because we're closing outside. Win. That's a huge win. Win, doesn't matter. Win, all you need is outside. Outside, I make 100% trade. I've got one draw, right? And then last week could have been a draw. You would have taken some profit in late in the day on that move Friday, more than likely. That's a draw, a win, a loss. So if you traded weekly supply, weekly demand for 100% trade, for us to close outside there, your first loss was back on the 3rd of October. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So of 14 weeks, 2 of them were draws. So 12 wins, 2 draws, and 1 loss. Out of the last 15 weeks. Like, holy shit, are you kidding me? No. We don't close inside here often. Loss. That was a win on Thursday and a loss on Friday, or a scratch on Friday. A win. A big win. A big win. If PVI breaches, you automatically wins. A loss. So 3 losses and 18 wins. 19 wins. 20 wins. 21 wins. All I'm looking at is these white lines. Do we close inside it or outside it? If we close outside it, you're basically doubling your money. Now, are you going to double your money off $1.25? Not every week. Some weeks you can't get into them. Why? Because we moved too far tonight. So what do ITG guys do? As soon as we get down to weekly demand, guess what they do? They go look at weekly supply, and they start putting on a 5 wide or a 10 wide, if it's ES, a 10 wide debit spread here for $1.25. Well, what happens if that debit spread is only costing you 70 cents? Some of you guys are going to still trade it at 70 cents. I'm going to go down to where whatever's trading at 125 for a 10 wide on ES, or 125 for a 5 wide on SPX. That's what I'm buying. Why? Because I want that ratio of putting $1.50, $1.25, and $1.25, $2.50 in and getting $5 out every freaking week. Gordon's already got one. You guys know this trade. Now, look at ES on a 5 wide. Don't trade futures off this, guys. But we just got our first long mean reversion, right, of the day. And I know y'all go, I say, don't trade it. And everybody's like, click, 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 click. I hear them. I know y'all are placing the trades. We don't have it yet on NQ. But we're closing. ES is closing above the band. And so is it close above the band? Where should you take off your contract? Right? Where should you take off the contract? Well, I mean, weekly demand's a pretty big level. And it's at 47.5 underneath the 50. So I wouldn't stretch an ES trade long, much above 47.5 if you're in from wherever the band is at 44. I mean, we pushed 44 all the way up to 47, so that would have been my trade. I'd already be in and out. Now, the model is showing you long, and the exit is going to be at that blue line. And again, we have this as a stat just so that we can tweak it to ES. The best one works on the Dow. I mean, YM works the best because it's the most mechanically traded index in the world. It's auto. It's all algorithmic. And that's why quant guys love it, because retail doesn't trade YM. And so there's not enough volume, retail volume, to skew up your levels. And so it's typically computer to computer, level to level, zone to zone on YM. Did you hear that? Order filled again? I have no idea if y'all are here or not. I turned off tick strike because I didn't want y'all to scream. ES is holding. Yeah, we'll see if she gets to weekly demand. NQ's above it, right? Look at NQ, above weekly demand, white line. Daily sell target 1, above it, right back to it. Look at that wick off of it, right? What does Lil B talk about all the time? We failed. What do we need to do? We need to reclaim a zone, and then we need to retest a zone, and this was a positive retest. Doesn't mean we're not going to go back down, right? You don't be an ostrich, put your head in the sand. Don't fall asleep with longs. We could easily come back down and reject it. But this was a hell of a trade. A reclaim, a retest off a key level, and then long. Now, ES over here on the 5 minute. It's better on the black. Sorry. ES over here. That's 1 minute. This is 5 minute. That's why. ES over here. We failed it. We came back to reclaim it. We retested. Did we get a close above it? No longs. And then what happened? We moved lower, and then we got a good candle. Got to learn how to read these candles, right? The body is value. The wick is strength. Who won that candle? Bulls won that candle. Why? It went all the way down here, and Bulls pushed that shit all the way back up here on NQ. They did the same on ES. So when value gets there, if we don't break value low, you don't short. On ES, on NQ, if we don't break value low, you don't short. Did we break it here? A wick. Bulls defended. Here's ES. If you're long from the band, you guys wouldn't be because you didn't have it on here. But if you're long from 44 half, you got big money there. If you didn't take it out because you were greedy waiting for weekly demand, that's fine. You can still be waiting. But let's see what happens. If we don't get a close outside this harmonic zone at 46, ES could be in trouble. Are we getting a close above it? It's looking like it on the 5 minute. Again, I don't condone necessarily trading off a 5 minute chart. There's so much information you're missing in that candle body. But knowing these candles, which way are we pushing value on the 5 minute chart? The candle body for the new members. Which way do we push value here? Lower, lower. Even though we had a big bottom wick and bulls technically won this candle, what happened on the next candle? Bears sat on it. And that's where you see candle close, candle open. That's strength. That's strength. Who won that candle? Bears. They push value lower. This is strength. Bulls defended here. Bulls defended here too. Bears weren't done yet. Now we get above this harmonic zone, 46.50. ES should go to 47.50. One ES point, is that a lot? I don't know. It's $50. All right, back to PVI. What do we got? I don't even remember where I was. Again, I told y'all guys, I didn't script this. I don't script this stuff. Here's our zone. Here's our levels for tonight. Again, I'll post this over in Reddit. 2 weeks in a row will be the last time I post it for the year. But TLT, we should make a bottom on TLT this week on bonds. which means interest rates are going to rise a little bit more, and then wait. So if you are in the process of refinancing your home, don't lock in your interest rate this week, because we should put in a low this week on TLT. And as bonds go up, rates go down. Got to know that relationship. It matters. So again, you're going to have all this in front of you. I'll post it tonight, but here's our zones. Here's our levels. And again, 479 on QQQ, 482 auto, 488 PWG, 481 on baseline. And again, Q's got some issues. We only have earnings in banks, Goldman, JP Morgan, and Bank of America that I track. I know there's more, Wells Fargo, Citigroup, BlackRock, I think. But again, there's more. It's just the ones that I'm tracking on the PVI spreadsheet. It's just Goldman, JP Morgan, and Bank of America. So again, I can't give you this. The yellow is here is a good chance that we're going to see a squeeze, a chance that the high side or the low side will breach this week. These stocks are got a lot of pent-up energy and they're ready to move. That's the only way to really describe how I put in those yellow boxes. The asterisk just means 52-week lows. We got 52-week low on TLT and ZB and OIH. I got to color those in. And AMD's at a 52-week low. I can tell you all this from AMD. It's getting ready to be a leaps trade. And so with it, ITG, I'll go through and I'll post tonight. I'll post the 20 delta for February OPM, 20 delta, 25 delta, 30 delta for OPM. And I'll show you all the differences of why you would want to trade the 30 delta versus the 25 versus the 20 delta. We're going to talk about it tomorrow in chat. In stream, it'll be after the first hour. But we're going to talk through OPM tomorrow to see why. Because if we get down to SPX, when we look at there's your close entry. Like this system fired a winning trade, and it got you in the system gets you in the worst entry ever, right? The worst entry ever was getting long at 46 and getting exiting out at 47.25, right? We'd play the bands. But again, if you're not manually trading it, and again, this system back testing on ES with a positive EV on a 5-minute candle, I'm just trying to tweak them and run the back test before we release a script, because I don't want to release a script and you guys jump in like it's holy grail. There is no such thing. But it could be a good one. If nothing else, it just tells you sit on your hands and wait until we start getting long signals before you start to trade. Again, NQ was a long up. It really wasn't, but the system wanted to get long up here. And so again, I would never have taken that trade, but manually, and that's why NQ has so much slippage. It doesn't honor. Matter of fact, here, and again, I don't know if Nick's on. I got Nick's Voltron on, and I don't even know if these are the right stats for his Voltron. It's probably new. I need to change it. But when you go outside on NQ, that's why the Voltron becomes so important. And again, that's Nick. That ain't me. I have nothing to do with it. And Nick and Moose put that Voltron together. And that's the purple bands on NQ. And you'll see here that we wick down through the Voltron, wick down to the Voltron, wick down to the Voltron. And again, we're breaching the bands on all three of those. The green arrows are just triggers for the mean reversion trade. Well, the triggers line up pretty damn good with the Voltron on NQ. I don't trade it on, I do trade it on NQ, but I don't let the system run on NQ, right? That long short on NQ, or that long sell on NQ, that long, I mean, you got in, if you got long at 72 and we went all the way down to 890 and you're still in, oh, that's painful. That's painful with MNQ. Okay, and then the move back up. And so again, that's why I don't want to release this script yet until I have time, and with our other home and the flood and a roof and all that stuff, I just hadn't had time. But again, I want to do right by you guys and release something, but there's no reason to release something early just to release it. ES gave us a good mean reversion off the bottom, and it was following. Again, 5 minutes, we're following each other, right? We had an inverted hammer with a green candle with a large down wick. The key was the strength of the wick. Told us that if the next candle one time frames up on a 5 minute, this is a good long. And if this was your stop, you didn't get stopped out where you would have if you got long on this one or this one on ES, but you already had profit, right? And so what do we talk about futures trade? Get in a trade, get risk out of a trade, get profit in a trade, and then manage your runners. Never let a green trade go red, right? And it sounds simple, but my goodness, if you trade 3 contracts and you get in 3 contracts and you sell one right here, and then your stop is down here, and then we go up here, and now you've got risk out of the trade, and now you've made profit in the trade. Now put your stop at your entry. So what if you don't make a penny on your 3rd contract? Like we go all the way up here, and let's say you got your runner, you're managing it to weekly demand, and we haven't quite hit it. We did hit it, but let's say we haven't, and you got your 3rd one sitting right here, and you got long way down here. I mean, we're talking 4 points on ES, so it's not way down, but it looks way down. Set your stop at your entry, or go to the top and set your stop at the top of the value of entry. Or we got 1, 2, 3, 4. We got 4 zones here where value area low is at the same thing. Move your stop up to here and go to bed. Don't even put a profit taker. Move your stop right here and go to bed. And if you wake up in the morning, we're way back up here at weekly buy trigger. That's way back up here. If we're back up here, you made a fortune sleeping. If we go back down, you got stopped out and you made money. If this was the bottom long of the week, are we going to come back and retest it? We might. Is there a chance we come back and run your stop here and then go back up above weekly sell trigger and you got stopped out? Yep. And if you don't like that, then guess what you do? Because if this is the low of night, we won't retest it. Because we didn't retest it here, and we didn't retest it here, and we're not retesting it here. So if this is the low of night, and we get back above weekly demand, which we're doing right now, then you start looking at these two. And once we breach back into the weekly supply-demand box, you want to go ahead and sell one of those premiums. Whose back ratio was a debit? Yeah, that too, SL. Absolutely. Put on a call debit spread. We already talked about it. All right, anybody got any questions? Let me go to YouTube. When to go cash in a 401k? I don't know, Sir David. I mean, I would go and say, I would go and ask, these questions. Was Monday's high the high for the year? If you can say yes, then if Monday's highs were the highs for the year, then you should go cash. If they weren't, then you shouldn't. Brad, I went naked. I just sold 5590s naked personally. I hadn't done PVI yet. I'll do it in a minute. I'm not going to do PVI, that portfolio, while I'm on the phone or while we're on stream. Average number of days in a market correction, Sir David, I don't know. I don't care. Because as soon as you think we hit the average, again, you're going to trade back long. You're going to be early to a reversal. I mean, use price action. And so, I do. I use price action and I use the levels that we design. Now, I will go and do this. Momo is telling us what? This is the Momo indicator. For the members that are not ITG, PWG Momo, they have it on their chart. It's a proprietary script that they've got access to. The dots are telling us weekly overbought. Got our first dot on Friday, SPX. That's telling us weekly we're oversold. The oscillator is simple. That's daily. Don't get into using it 4 hours and others. Right? I know people go down here and look at 4 hours and they're like, well, if a daily chart, if the dot represents a week, then does 4 hours a dot represent 20 hours? Nope, it doesn't. It's not. It is 100% prescribed, detailed, precision down to the oscillator lines are the daily and the dots are the weekly. And if you get off the different time zones and you change the time input, you're FUBAR. Will it work? Maybe. I love it, Nick. You guys are hilarious. Now, the daily's telling us we're going to go lower, right? Because Friday's action was negative. So, could we go lower? Yeah. We can stay overbought. We can stay oversold. So, that oscillator's not telling you a whole bunch. Again, the red trend indicator, it's red with dots. That's just telling you that everything's not lined up red. When it's red, no dots, we're red. And what are you expecting? This is coming. This is what happens on red days. Right? But what do we do right here? We mean reverted through time. Red day, green with dot, green day, red no dot, red day, red no dot, red day, green with dot, green day, red no dot was a doji. Right? Dojis are a wake-up call, right? Alert, alert, alert. Get ready. Trade the doji. Trade long above the top. We did. Trade short below the bottom. We did. Do both. But my God, when you go here and you draw a line at the top of the doji and we take out the top and you get long, you forget about the bottom of the doji. Never forget about the bottom of a doji. Never, ever, ever. Dojis are the easiest thing in the world for folks to learn to trade. That and inside breakouts. The problem with inside breakouts is an inside candle. Are you doing a 1 minute, 2 minute, 5 minute chart, maybe a 3 minute chart, 15-minute chart? What are you trading? What's your time frame and what instrument? Because they all act different. ES trading 2 minute and 5 minute, one time frame, one time candle, inside candles, breakouts, or they're money trades. They really are. Again, drawing the 5% correction. We're looking for 57.92 tomorrow. Did we get it tonight? We did on ES. Is that going to satisfy the market gods for tomorrow morning? I don't know. Cross between an elephant and a rhino. Hell if I know. Again, that's why I don't care about how many days an average market correction is. Does it matter? I'm sure it does. But, I mean, so does 8 EMA, so does a 9-period simple, so does a 9 EMA, so does a 10-period simple, so does a 10 EMA. And I can tell you right now, I know hundreds of dozens of all of them that use each of those. 8 EMA, 9 simple, 9 EMA, 10 simple, 10 EMA. That's 5 different moving averages. They're going to all give you 5 different data points on a 1 minute chart, a 5 minute chart, a 15-minute chart. Which one's right? Which one's wrong? I don't know. SL says the 9 EMA is king. I traded 9 simple until my trading mentor showed me the 8 EMA. I started programming in 1989 and MS-DOS, and I started programming 8 and 21 exponential moving averages. That was my computer science project in 1989. I got a D in the class, and I made $1 million before I was 30. How the fuck you do it? Who cares? Right? Never let learning interfere with your education, or never let education interfere with your learning. Anybody know who said that? ITG? Or did you guys already tone out? Okay, weekly supply demand, Panda, yep. It's a script that we use. I would try to get one on Rocky. I would try to do both. Why? Because it's basically a passive embedded hedge against your PVI trades, your theta trades. So, I mean, what's the best case scenario? We finish above the box or below the box and inside PVI, and you got 100% win on your debit spread, and you made money on your credit spread. If we go out and your credit spread is challenged, well, you know for 100% your debit spread made 100%. It's an embedded hedge. Not a big one, but it helps. And then you go back, and as we showed on SPX, 18 of the last 22 weeks, we finish outside the box. We finish outside the box a lot. Like 83% of the time, we finish outside the box. So if we can customize a trade that's going to have an 83% win ratio, and we can put in 250, and if we win 83% of the time, they're going to pay us back $5. I don't know about you, but that's the table I'm playing at Vegas. Now, here's the great stat. We trade weekly supply or weekly demand. We trade inside the box at least once. 99.98, Nick said, of every week we trade inside the box. So if we gap open tomorrow, SPX gaps down below weekly supply. If we gap down tomorrow below weekly supply, that means there's a 99.98% chance that we're going to go back to it. So what do you think you should probably do? Put on a debit spread back at weekly demand, because we're going to go back into the lines. Now, and we're in the lines every week, all the way back to June, May, June. Where's 1 week we gapped above it and we came down, got close, but not quite cigar. It was the fourth time in 20 years. March. This is why I love having these on here. Because you guys talk about back tests. As a football coach, everybody thinks huddles, high school guy, is great. But back tests don't show you. Right? We're visual learners. Back tests do not show you everything. I'm going through. Here we're in March. Here it is. Fucking the 20th of March. Look at this. We gapped open on Monday. And we all played put debit spread, we all played put debit spreads for weekly demand. Guys, for non-ITG, this was the fourth time since 2000 or 2002. This is the fourth time that we gapped above it and we didn't come back to it. Like 4 times in 20 years. Now, does that mean we gap above it and you're degen? I know folks do it. And you're degen and you all of a sudden put 50% of your portfolio on here? Well, you just got PHUCT. Sound it out. Rocky, debit spreads are ideal. Let me show you where debit spreads are ideal. Debit spreads are ideal when we're right here. Right in the middle. Matter of fact, let's do this. I'll put on sell trigger, buy trigger. Red and green. Debit spreads are ideal when we're right in the middle. And if you got them here on a Sunday night, and I don't know what futures did on Sunday night because SPX didn't show us. And boom, you pushed up there and you got you're happy. Your debit spread on weekly supply, we're killing it. If you didn't get weekly demand, boom. Now your weekly supply calls are dead, and now your weekly demand put debit spreads are in the money. And then Wednesday, you're like, shit. And then Thursday, I'm the man. Because we're making a lower low on Thursday, and now we're looking, are we going to go down to PVI on Friday or Thursday afternoon? Maybe. And you're all happy about your put debit spread. And then we go up here, and then we close Friday above your. So it ended up your call debit spread was green, put debit spread major drawdown. Put debit spread was green. Put debit spread was green. Right here, your call debit spread was 0. Your put debit spread was at $4.75. And then Friday, this is what I tell you. When I get $4 for my debit spread on either side, I close it. Right? $2.50. Why? Because this can happen. You can have one of those deals where you close out one for $4 and then this one runs. Now you made $9 off $2.50. Like, that's stupid. It's not pretty far away, Snake. That's PVI. So I'm just trading PVI. But since you go back to March 20th of last year, and that was the first time, if we gap down, we might gap down below weekly demand this week. And if we gap down below it, I'll play a call debit spread back to weekly demand, back to the lower white. Why? Because there's a 99% chance we hit this one. Here's the crazy part. There's a 64% chance we hit both. So what did we do last week? Your call debit spreads were in the money. I know ITG members bought put debit spreads, and the put debit spreads are the ones that paid. So if you've got a bias like this one, right? We opened, we wicked all the way down to weekly demand 3 weeks ago, and we closed above weekly supply. And you were in the money Monday, Tuesday, Thursday. Wednesday was Christmas. And then Friday we came down, and you're like, oh man, we might finish in the box. We still finished above the box. You still won. That's still 100% winner. So if we do go down, again, did we hit both this week? We did. We hit weekly demand and weekly. This was a 64% probability week. That's why we always take trades to the other side in the event. Now, this last week, did we go back up? Not at all. This week, 2 weeks ago. Nope, we didn't. But when we get down here, did we hit it on Monday? And again, I hate to split hairs, and I got to move my January 1st line. Come on. Oh my, they locked. Come on. There. Yeah, we hit it. If we didn't hit it, you would play a call debit spread back to it. And then guess what happened? You got paid on Friday. Even, Thursday. You got paid on Friday. A 4-day week. Anyway, so that, again, they're just little tools that we've built along the way. I've done it to help me manage a portfolio. I think you need more trades than just your theta trades. So if you can put on call and put debit spreads, again, manage your risk and your parameters. Did we get a sell-off? Yeah, we did. And you're watching for value area low, 58.43. Again, on that bounce right there, you probably could have scalped, I don't know, 20 cents off SPX on that bounce, maybe. All right. Anybody got any questions? Ranges, Rocky. Again, I trade the level. I trade the weekly supply demand levels. Those are the stats. Let's see if we got it. Let me go to pin messages. I don't have them in front of me. I'm not sure if Nick's on. I don't know where the spreadsheet is. I don't have it in front of me. I got the stats and I'll post them. on PWG. I know it's posted on my Twitter. Again, it's just statistical analysis, guys. So, when you start looking at, stats, I can pull it from my highlights, I think. It'll take me a second to find them, though. I post so much on Twitter. It's just all mechanical, and thanks to Nick for running the stats for us. Again, non-ITG guys, you guys have no idea the amount of expertise and alpha that's in ITG. It is not me. I'm just the guy that gets on the microphone every day. I'm not the only one, but I'm the main one. But Little B's on, Case is on, Moose is on. And then we got dozens of people that are helping run scripts and back test and set up. Countless. I can't even begin to imagine the amount of indicators, statistics, and stuff that's been built by just members, guys trying to help our community. So literally, when we talk about traders helping traders, it's the real deal. And everybody wants to see everybody succeed. There's no selfishness. Here, I can show you this. SPX is a little different, but from 1999 to 03, again, we're in 05, 2025 now. 90 touch ethers 100% on NQ. Touch ethers, it's 99.98%. Guys, it's going all the way back to 1997. No, Rocky, we don't get SPX weekly supply demand until Monday morning at 9:30. So if you want to sit and wait until Monday morning at 9:30 to trade SPX options, not because you have Interactive Brokers or not, because the levels of SPX, they're auto-configured to the opening price on Monday morning. Whereas futures have them from the opening price Sunday night at 1800, Globex. So we have ES already, and NQ already, and Rusty already, and YM already. We don't have IWM, SPY, QQQ. We don't have NDX, SPX, RUT, DJX. We don't have those. DIA. We don't have those yet. We don't get those until 9:30 tomorrow morning. So you either take ES and interpolate, calculate the difference where SPX should be, or just wait for tomorrow morning at 9:30. Well, if you don't want to wait, then you got to either interpolate what SPX would be or trade ES. ES is $50 per point, whereas SPX is $100 per point. So with ES, you trade either a 5 wide for half the premium, or you trade a 10 wide for $1.25. Right? So it's, again, keep it simple, stupid. I'm from Alabama, man. I'm from the public school systems in Alabama. So don't make shit complicated. All I know is this, is we're gonna touch, NQ is gonna touch weekly sell trigger, weekly buy trigger 100% of the time, and it's going to touch weekly demand, weekly supply 99.92% of the time for the last 25 years. ES is going to touch it 99.93% of the time. Now it's 99.97, 98. It's actually 99.982. It's stupid. It's 100%. Right? But it's that one chance of zero, and there is no double zero on this roulette wheel. There's only a zero, but instead of 50 numbers, there's 100 numbers. And there's only one zero. So, again, whether you want to use these stats, for your advantage or not, you don't have to. Again, I'm not going to sit here and argue and try and, persuade anybody to trade something they're not comfortable with. All we do is provide the data and the know-how and the expertise and advise the best we can of, hey, this is what the data's telling us, right? I mean, this is what the data's telling us for this week. Do you have to trade it? No, you don't. But if you want to go down here and go, well, shit, over the last 2021, 2022, 2023, 2024, the average annual return for just doing this one PVI strategy has nothing to do with the debit spreads at weekly supply demand. It's averaging over the last 4 years 99.61%, and I've shared every level every week for 4 straight years and have not taken a single fucking week off. Why? Because this is my retirement. This is my work. That's why I do it. And it when we first started in 2021, it was taking me 18 to 21 hours every weekend to do this. So I told Andrew, Options Millionaire, his Discord, I'll help. I helped him get started, build it up. I did a lot of the PVI stuff, and it wasn't that sharing the data that I was doing was painful. It's just answering everybody's questions. And when you have to stay up Wednesday night, Thursday night, all night, because we've breached PVI, and there's people that have families that are asking you for help, you do it. Well, at some point in there, me spending 22 hours a day on the computer helping everybody else, it's somewhere in there, I got to get paid for that. It's stressful enough for my own portfolio and the people I manage, the portfolio, the accounts I manage, families, retirement. The PVI portfolio belongs to a widower in Hawaii, and she's in her 80s. And she lives off this income. So am I conservative with it? Yep. Do I hedge the hell out of it? Yep. Am I going to defend it? Yep. Are people going to be able to follow the way I defend it? Nope, not all the time. Are some going to do it better? Absolutely. Moose and Case, they do it better than I do. But I'm a simpleton. I do what I know, and I know what I do, and I do what I know. And again, I got an 83-year-old, 81-year-old depending on me. And so this is her portfolio. Now, she could close it tomorrow. She hasn't, but she could close it tomorrow if she wants. Again, her portfolio is over $200,000, $238,000, I think now. I only put $50,000 at risk. And that literally every penny of her portfolio is sitting in laddered, income structures in Interactive Brokers. So she's a lifetime friend of ours, and like my mother. And again, I know her family well, her kids. I talk to her sons all the time. Was she worried about this week? No. Matter of fact, I have not talked to her since last March. And so I hadn't talked to her in 11 months. And she'll go through and she'll pull down. She'll call me for taxes, and I'll help her with her taxes. And then she'll go through and she'll withdraw some certain sum of money, but she'll leave $100,000 in there. And there might be a time where I got to drop her portfolio down to $30K. The only reason I like doing somebody else's portfolio is because it's managed. I can't go in and add money into the account or take money out of the account. I can't do any of that stuff. And so it's not my personal trades. I was sharing with one of the members about liability. And so it's not my trades. My personal account, I go up to $250,000 each week. Rarely more, only on, when there's blood in the streets coming out of people's eardrums, I'll sell, substantial amount of premium. But typically I don't do more than, 20, 25, 30 contracts, 100 wide. Again, if you're doing credit spreads, you want to sell wide, 100 wide. If you want to do in debit spreads, you want to buy tight, right? So you want to buy tight so theta doesn't work against your premiums. If you sell, you want to sell as wide as you can afford because theta is going to enhance your performance faster, right? And so if you're 100 wide and we push up to weekly buy trigger, you're going to see profit. If you're 10 wide, selling 10 wide credit spreads or 25 wide, and we move from weekly demand to weekly buy trigger, your position might change 10 cents, 15 cents. Whereas if we get back up to weekly demand, what I sell that one trade for? $8, $8.30? No, $8. That $8 will be worth $7.10. If we hit weekly buy trigger overnight, I guarantee you the 59.90s will be below they'll actually be below $7. We'll go from $8 to like $6.80. I'll make $1.20 while I'm sleeping tonight if we go back up. And so I know right now there's a 64% chance we're going to hit this week. So 64 is better than 50. So I want to put in a call debit spread here. Now, do I want to just buy this and sell a put credit spread way down here and buy this? And what if we go down and that's tested? That's going to lose more money. Right? So if you buy in this, you want to make sure that you can sell some premium up here above weekly R3, or use the profile, or use the PVI spreadsheet. But if you're gonna buy, you want to sell something up here to pay for that. If you keep buying, you're gonna run out of money. In my world of investing, the more you buy, the quicker you're gonna run out of money. Ooh, NQ 1 minute's coming off. All right, ES, we got another breach and close on a mean reversion. I'd be careful. I'd go down to the 1 minute. I didn't set up my charts. So again, are we going to move back to VWAP? 966, 58.54. I don't know, but if we do, here's settlement. So yeah, there's probably a good chance we're going to move back up this before 9 o'clock tomorrow morning at 58.54. It doesn't mean the market's done going down. We'll see though. Asia's open, so we'll see how the Asia markets are going to impact. Up to 2030. So we'll look at the Asia market and see how it's impacting the Asia Open and see how ES and NQ are responding to it. But again, guys, I don't know if it was helpful. I like to go through the process and then, okay, let's look at JP Morgan. Let's look at some channels that are drawn. Let's look at some key EMAs. Let's get further down in the weeds. So start looking at gravity points. Let's look at momentum. Momentum's getting to an oversold condition. Well, no shit, Sherlock. We're almost 5% off the all-time highs. We got to be close to being weekly oversold. Right? Somewhere in here, we're going to expect institutions to start buying. Does not mean the market's going to go straight up. Right? They might buy here. Boom. They might buy more down here. You don't know that. But you just go through the process that if we close this gap, they're probably going to buy because we're more than 5% off all-time high. If we don't bounce there, then we're probably going to go down to, and I really like that we did this because we're probably going to go down to 57.10 to 57.15. And I might have to take my dog to the hospital. He is not doing well. Again, you just got too much information here. Again, the November lows, the gap fill, retesting JP Morgan's long put for February, and then our channel, and that would confirm our channel. Are we going to bounce from there? Maybe. Are we going to push through it? Maybe. We might go down and close and bottom wick all the way down here and have one of those big-ass V days. And if we do and we close back above inside this channel, above 57.10, I would want to be long. Right? Because if we push all the way down here and come back and close above this zone, you're no longer early to a reversal. You're in the reversal. And above here, man, you're leaning long. I don't even know where weekly supply demand are yet. But man, if we put our cursor right on there where those two puppies cross, it's telling us Wednesday or Tuesday or Wednesday of this freaking week. One of these 2 days, we should be maybe at it for the lows or maybe below it and at it for the longs. I don't know. Again, I'm an if-then guy. And I know there's traders that would mock that I'm giving myself an out. No, I'm not. I'm smart enough that I don't know what the fuck's going to happen. I can't forecast the market. And anybody that tells you they can, they're full of shit. Or they're a gambler. Because nobody knows. But we can read the tea leaves and get an idea of what to expect based off what we're seeing. And that's the process I like to go through. And I go through that on the chart, and then I go through and I pull up. After I've done the chart, then I go through and I pull up the data. And then I let the data tell me, hey, these are the important levels based off quantitative metrics. So now I got chart analysis, quantitative metrics, put them together. That's how I get the 100% return on PVI every year. Is it 100%? No, it's pretty damn close. I can tell you right now, if you're up, 99 point, if you've averaged 99.61% for the last 4 years, are you complaining about the 0.39% that you've missed the 100% return? No, that's why I call it the journey to 100% in Reddit. Because to me, it's the journey to 100%. And it is a journey. It's not easy. It's not cut and dry. Again, if you're looking at the unhedged portfolio last year, that's fire and forget. There was only 2 weeks where it underperformed. The week we breached Labor Day weekend, it was down $25,785. The actual PVI portfolio, if I did not hedge it. And then the last 2 weeks, because I put this one on, but the last 2 weeks was down an extra $1,600 of premium that we didn't get, that I got on the managed side. Ooh. Don't do that, Bet. I'll screw it up. I'll tell you, I can screw up a train wreck. So these are the 3 weeks, 4 breaches, intra week. We had 4 breaches, and we had 1 closing breach. Go back to 2023. 2023, we received $100,000 premium, and our total was $94,000. So the extra $6,000 was hedges. But we breached. What do we have? 7, 3, 6, 7. First one in March. So we breached, closing breach, but we're safe. Breach, closing breach, closing breach, and another one late in the year, breach, but we were saved. So 3 breaches, closing breaches this year. 22, breach, 3 breaches. How many breached during intra week? 3, 4, 5, 6, 7. 7 intra week breaches, 3 closing. Here, 7 intra week, 3 closing. Here, 1, 2, 3, 4 intra week, 1 close. Now, does it mean our models are getting better? Maybe. I still got to do this week's on this. I have it on my other computer. I just hadn't updated it here to post it yet. So again, there's no. It's not the be all end all. Is it a good system? Yeah, I think so. There's NQES, another long, profitable. Right? So we got a profit, we got a win, we got a win. So we got 3 ES wins tonight on mean reversion. All right, guys, that's all I got. If you got any questions, guys, on Reddit or Twitter, DM me or tag me. I'll be happy to answer you. Yeah, Sir David. But again, I don't sell Delta. I don't sell, 14, 30, 45 day trades. I don't do tasty trades. I don't watch their videos. I don't trade them. I do what I do. And I do what I do pretty good. I'm not some of the other contributors in ITG. They do some of that stuff and they do really well with it too. Right? I am not bashing anybody. There's a million different ways to make money. Your job, what I talk about in ITG all the time, is find your fit. Find what works for you and then shore it up. And you don't practice a play or a trade till you get it right. You practice the damn trade until you cannot fucking get it wrong. And you do it over and over and over and over and over again until you can't get it wrong. And when you do that, that's what this is. There's 52 trades. There's 104 trades. There's 156 trades. There's 208 trades. And right here in the last 4 years. And those are hell of returns. You do it till you can do it in your sleep. And you don't deviate from it. You just, now, does it mean you put your blinders on until you can master one thing? And then you start to expand out, start looking at ways to build out other trades that are going to play. In football, I call it complementary football, right? If you run the wing T in high school football, well, you better have a bend, don't break defense. You want ball control, slow the game down, keep the score low. If you're an air raid offense, then your defense should be a blitz, all or nothing. 3 and out or you score a touchdown. Rocky, that's all SPX, only SPX. I don't do any other trades. And again, this is just the SPX model. Now, there was one in here, right here, in April. I traded an ES contract instead of NQ, or instead of SPX. It could have been a fill. It could have been Sunday night. It could have been a myriad of things. And because of the ES and I had to trade multiple contracts, it skewed my at risk a little bit. Or maybe we breached down early and I just sold ES. Anyways, I traded long SPX and short ES against it. But, I mean, look at the premium. So I know we were deep in the money. Right? Any day, any week, you're getting $400 to $500 per contract. That's healthy put premium. Here Monday is just telling me that I put on a diagonal. Right? I sold the 5400s for Monday, the following Monday, and then I sold this Friday's. I bought the following Monday, and I got a 10-cent credit for a 25 wide diagonal spread. That's freaking excellent. Doesn't happen often. The dots are just telling you that I waited and I sold 0 DTE calls, meaning I sold Friday calls. And so when people ask me about Friday calls, I'll direct them here. And again, Nick and Case, 2 of our contributors, they run these every day. And so we have SPX. This was from Friday. And we sold certain levels. Like Friday, I was short 59.85s on SPX. And that's on, that's Cases. And Nick does this. And these are just SPX. And so I sold 59.85s. I was inside Nick's ranges. I was above Cases ranges. And these were the calls that I sold Friday. On SPX, 0 DT. And so again, we go to Friday and I haven't received a lot of call premium, then I'll use our contributors. I mean, why not? They do so much good math. I mean, it's stupid. Then we go to weekly ranges, and here we are for, last week, Nick posts the outlook, and he posted that at the beginning of the week, we hit bear target, and we bounced back to weekly supply demand. On NQ, we took out bear target. We went all the way to bear exhaustion. I don't have this. Now, do I have something similar? Yeah. But why on earth would I go develop it when Nick's got it and it's pretty? And I go look at it. And then Case goes and posts his range for this week. And again, statistically, I mean, you look at this, and on the low side, 55.28. Damn, that's hella low. R2 is what we usually trade, is at 56.25. Well, I just sold and it's got a 95% win rate for 20 plus years. So, again, I don't have Case's ranges in the spreadsheet. I don't have a column with Case's range, but I don't have to because our community has this. And here's Case's ranges last week. Again, 1.6 to 110. Here's me, here's Bob, here's Case, here's Doc, here's one of our owners. Golden Cross does a 3-hour roller bot for the first 30 minutes of futures and a 2-hour roller bot for the first 2 hours of futures trade. And again, is there a difference between 30 minutes and 2 hours? 10 points on the low end, 10 points on the high end. Right? So the 2 hours showed the market was probably going to be more subtle than the first 30 minutes open. That's important. And then we got Maven, and then we got Nick, and we got other people. Again, so you look at this and you're like, well, hell, here are my ranges, but these are just my ranges. You got auto, baseline, and PWG along with it. And then you got all these other guys. And again, do I have something to do with all of them, most of them, and how they decide their ranges? Yeah, maybe some, but nobody does it the same. I couldn't tell you how Maven does his ranges. I kind of know Cases. I kind of know some of Bob's. I have no idea how Doc does his ranges. I don't know anything about Golden Cross's roller bot. I don't know how Nick does his. But then here was Nick's last week, and then Nick's for this week. He's got SPX ranges. He's got the option-based range, and he's got volatility-based range. So I would look at the option-based range and see how does it compare to the baseline model, which is my option-based range. And then the volatility-based, how does it compare to the PWG model? Because that's my volatility model. And then he puts NQ's weekly outlook. And where are we at NQ? We're down here below weekly demand. So again, when I talk about ITG and we talk about independent traders, this is what these guys are. Independent traders. And so here's the analysis that I post. So again, yesterday morning not yesterday. I do this every day. Here's last week's spreadsheet. Here was the over-under for Monday, for Tuesday. For Tuesday, we hit it. For Wednesday, and then for Friday. And I forgot to post it here Friday. Here was the close for the week. And then yesterday morning, Saturday morning at 9:58 Eastern. So 7:58, I had already run the SPX model range profile and the template. And then today, I filled in this portion of the template, and that's what I've shared. And so again, that's mine. And then here's the trades. And I tell everybody, sit on your PCS position. You know, this was, back in December, back in January, last week, and I shared some of these. Some of the 0TT stuff, I don't post it. Why? Because we have members that set alerts to, I'm the only one that posts in this group, or in this channel, but we have members that post alerts that if I post a trade, they blindly go take a trade. So if I'm trading 0DTE on SPX, I don't post it in here. Because if you're not in stream, then you shouldn't know I took the trade. If you're on stream, you're going to hear me take the trade, and I'm going to post it in the trading floor where I post my trades, and then we can talk about it. But I don't want somebody sitting at their office all of a sudden get buzzed because, oh shit, Vet took a long trade. I don't want somebody to post that. Where did I post it? I don't know. I thought I posted that spreadsheet, didn't I? The trade? No, I guess not. How the hell did I copy it over? The trading confirms. I was going to go post it in PVI. And then I put up the option pricing model every day. And so here we already got the 25 delta for, that was for last week. Here's February's 25 delta for February expiration as of Wednesday. And again, we're looking at trading February strangles, blue strangles, long, red strangles, short, all the way out to February. Do you have to trade the strangle? No. If you're bullish, trade the calls. If you're bearish, trade the puts. If you're neutral, trade the blue. If you're a theta trader, trade the red. If you're bullish and we start green tomorrow, then go and sell the puts, right? So if I pulled up, I don't have tomorrow's posted here, but this was last week, Friday, 50 delta. Did we start the market green or red? We started red. So if you looked and we started red and you sold the highest premium, Service Now, 1055s, we're paying $10. Netflix, we're paying $9.50. If you sold calls because the market was red, you printed. Just like tomorrow. If we run the 15 deltas for Friday, and I'll post it tonight, and the market starts green tomorrow, then sell the red puts. You'll make money. If we start red tomorrow, then sell the red calls and close them at the end of the day. All right, good stuff. I got to rock and roll. Yeah, I was just going to show. Thanks, AR. I was just going to show that if I take this and I post it, I would just go and edit it and just say personal, not PVI. And that's just so people know, right? Because I don't want somebody to get alerted and it's midnight and then they all of a sudden jump in. But they can. Again, I still think taking a trade at weekly demand is a good trade. Now, what have we made? A lower high from look left, and we've now made a not quite a lower low on NQ. NQ, the lower low was at 8:45 p.m. Eastern. ES was too. We haven't taken that out yet. Could we? Yeah, maybe. But we've gotten 2 long MR trades, and we didn't make a higher high. So you just want to wait right there. ES, just wait till we get above 58.50. No longs till we get above 58.50. If you want to scalp longs up to weekly demand or in there, that's your baby. But position-wise, it's once we break 58.50 to the upside is where you're probably going to see some auto bids come in after we've broken a recent swing high. All right, guys, that's all I got. I got to roll. It's been way too long. But I'm out. Peace, everyone. Have a good week. Again, Twitter, Reddit, hit me up there. I'll answer questions as I can. And again, if it helps, great, man. I hope you guys have a successful week, but at least you got a lot of data to go back to as to when to get long. And in the event that we violate a certain level, then we know what to expect on the downside. All right, guys, peace.